Good afternoon, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on gold exploration and development today. We will hear from David Russell, President and CEO of Galleon Gold Corporation. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Galleon Gold webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Galleon corporate presentation, and that can be found on the company's website, galleongold.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Galleon Gold. So we have Galleon presenting today. The company is focused on exploration and development of its West Cache gold project, located right in the heart of the Timmins mining camp in Ontario. The company has drilled up a sizable resource and is now advancing with permitting and development work. With that, I now turn it over to David to update our audience on the company.
Thank you very much, Tim. It's great to be with you again, and probably is a good time to update everyone before we go into the summer season. Everybody takes off to the lake and ends up having a lot of fun for the summer before then the fall season starts. But to start with, we have several projects, one of which is in southern Idaho. It was a joint venture with Eric Sprott. We own it 100% now. It's called the Neil Project, and we do have gold on the ground there. But the main shining star here, we'll call it the diamond in the rough, is the new project called West Cache. This is a 10,000 hectare piece of ground that we further developed with a merger with another company called Explore about 2.5 years ago. And we advanced it through a PEA study, and now we're on to permitting with this project. So with that, Tim had mentioned the disclaimer. I'm sure everybody can read the fine print here, and we'll have a quiz later. So with that, it's the Timmins camp. Now, if you haven't been up the Timmins camp, you get on an airplane and you fly about an hour and 45 minutes north-northwest. And the Timmins camp's been around for well over 100 years. They've produced well over 80 million ounces directly in the camp, indirectly out and about, say another 70, 80 kilometers either way. I think you're pushing about 120 million ounces of gold. So it's definitely a true gold mining camp up there, but it's got all the support. It's got schools, it's got hospitals, it's got support facilities for all the mining equipment. You've got people, and you've got really people that are very geared toward the mining industry, both open pit and underground operations. What we did is we re-drilled the project from roughly the million ounce mark, internally drilled and brought it up to about 1.56 million ounces and said, okay, we can keep adding ounces, but we need to actually go to a permitting stage here, get permits to take an underground and start what's called a bulk sample stage. That moves you into the pre-feasibility stage of a project. The management team that we've got to do this, I use the same group, same great engineers, metallurgists, mining people. Ryan Lougheed, right out of the Timmins camp itself, was my manager at Black Fox years ago when we built that project. Tim Smith, he's been in Canada for many years helping me build projects, as well as the U.S. And with that, we have a large land position. So when everybody says, wow, we're open on strike and dip, we have blue sky, we definitely have it here. You're going to find that we're only drilled about 1,000 hectares on a 10,000 hectare property here. Now, just quickly on the shares outstanding, we did a reverse split on the stock, a consolidation probably about 1.5 years ago. That kind of hurts you a little bit, but gives you another starting point. The shares outstanding right now are 63.5 million. Then you can see the options, the warrants, and that sort of thing. So fully diluted is about 81. And then the market cap lately has been fluctuating up and down. We're coming to the summer season, some of the sell-off and that sort of thing. They'll have to rebuild it as we go. But Eric Sprott's got roughly 21.5%. He's my strongest supporter here. He helped me get the company underway 2.5 years ago by putting in the first money to merge it and pick up this property that we're calling West Cache. Then we've got CCM Capital, some friends of mine out of Germany, great supporters in our stock here. So each one is a major player within our stock. And then you see management, 3%. That's really a good portion. It's myself and Lisa Buchan, who's my vice president of everything, I call her. And then we have institutional flow. So with that, we've got a small shareholder base and a good base to build the company from. Now let's look at the actual West Cache Gold project itself. In the Timmins camp, like I said, you fly from Toronto up to the town itself. In the town, you can see the airport right here, about an hour, 45-minute flight, on a what I call a pull jumper. It's a prop aircraft usually that they bring in. And then you say, go from the camp. Let's go from the right side. This is Black Fox, Stock Mine and Mill. We bought and put this together in 2002 through 2008, brought it into production with the same group that I've got working with me now on Galleon Gold at the West Cache. And we brought it to 85,000 ounces of production. It's been in steady production really since 2008. It's been through, I think, 3 hands or change outs. McEwen Mining is still operating that. He's doing well on drilling, especially at the Stock Mine and some of the areas from Black Fox going to the southeast here. And you can see the trend. It's in the yellow here. And let's follow the trend back. Okay, there's the Aquarius Mine. That's Agnico, I believe now. That's got about 1 million ounces sitting there that hasn't been mined. And then you've got the Bell Creek Mine. This is Pan American Silver. They've got the mill here too. And the reason I mentioned the mill, this mill is roughly about 4,000 tons a day, 2,000 roughly speaking, comes from the Bell Creek underground mine. The other 2,000 is on the west side, the Timmins West Mine, which abuts our property on this area here. But we won't forget the Hollinger, McIntyre, the Dome, the famous complex here. This is Newmont Mining Company now, but originally this was the Placer Dome Company in here. But through the shifts in properties and gold projects around the world, Newmont ended up with this project here. So with that, this is our property, West Cache. I'll blow it up in the next slide here. You can see that when you come right up to it, there's actually 3 parts to this property. There's the main part that's been drilled with roughly about 525 core holes. Or over 200,000 meters of drilling here, just core. We don't do reverse circ here. And then you see the darker area, that's patented properties, and the rest is light blue. The light blue area in this first area here that I'm circling with my cursor here, hopefully you can see that, went to lease. It took us almost 2 years to get it surveyed with the ministry, bring it through lease, and it's fully leased and ready to be able to be mined on. So without that lease, you wouldn't be mining on it. You can mine on private property or patented claims, but we needed the lease, which we got. Now then there's the Ogden property and the Price property. These are properties that have high profiles with structures coming through them. But in saying that, we'll drill those at a later date. We still have a lot to drill. This is what's called the District Porcupine South area. And then the north area is up here. We do have drill holes into that. We'll take that on after we get permits and start undergrounding on this side. We'll bring the drills back onto the property. Now, I'll preface this is there, when you're drilling gold and you see the flashy gold come out of the ground or the pyrite gold, electrum, that sort of thing, it makes a big splash in the market. What doesn't really make a big splash is what you're going to hear is the permitting. It's kind of like going into the doldrums, but you've got to permit a project to bring it forward to get through pre-feasibility and feasibility study. So that's the process we're in, and we should be done with that process by, we'll call it August to September, delivering the documents for permitting that are being worked on by Nordman, Knight and Peaceful, Blue Heron, a whole host of engineering groups, environmental groups are working on those documents. You present those documents to the Ministry of Mines. George Pire, a former Placer Dome executive, retired to Timmins. He was the mayor. He ran for a provincial seat and he got it. And he was also awarded the Minister of Mines. And he is an advocate of mining. You don't shortcut with him. You make sure these documents are done correctly when you present them to his department. So anyway, he knows lots about our project and he'll be helping us with putting that through. We should see permits, let's say by November of 2023 to start the project. If you come out of Timmins 13 kilometers, you'll see a sign that says Galleon Gold West Cache Project. That's our turn into the property. Now we've done the PEA study again, and we'll go through that data. Number one is you start with the drilling. You turn out a resource base, which was done before, about 1 million ounces. Then you turn out more of a PEA study of how did you develop your economics. So these are the numbers, and you can use your indicated cutoffs or your inferred, wherever you'd like to use the cutoffs here, whether it's 1.6 grams, 2 grams, 2.5, come across here. But for talking purposes, let's look at 472,000 ounces of indicated and over a million ounces, or about 1.1. So if we add them together, you're dealing with about 1.56. And I'm not supposed to add them together verbally and talk about it, but that's what it is. And gross value is pushing just under $3 billion in gold. And that's just the start on this property. So what we said is, why are we doing a PEA? Well, number one is I wanted to see, is there economics on this project to take it forward? Why are we here? Well, we found out using a $1,700 gold price, we're at about $1,915, I believe, this morning, so quite a bit higher, is what I found is we had great economics. So at $1,700 gold, you're at $378 million. NPV at 5% discount, and it's a 33.7% return on your money for a 3-year payback. I thought, great, we're off and running. We've got something. Now, is that what you're going to use for a mine plan? Part of it will be, and you'll hear the rest of the story as we start developing the bulk sample. It's got an 11-year mine life. Now, that's a great start. Now, where did the rest of the gold go? We had 1.56 million ounces. In here at the bottom, you see it's just under 900,000 ounces. Those were economic ounces in the underground category. We still have got to turn out an open pit category, which we do have the rest of the gold. We'll say another 600,000 ounces. And as we keep drilling, you'll find that we'll have more gold than that for the open pit. So this will be first an underground mine, followed by an open pit, or in conjunction with the underground and the open pit. So we've got the best of all worlds here. Now, again, there has never been a mine on our property. No open pits, no undergrounds. This is from square one, grassroots. And we're having great success with this so far. The initial capital to build the project will be $150 million. But what you'll hear is in the bulk sample, we'll spend $25 million going down to actually mine and deliver to a mill about $50 million in gold. And technically, we should be able to make some money on that end of it. So say once we get done with the first phase over the next 18 months, we'll spend 25. We'll have about another 125 million left to spend. We'll do that in stages. We'll do that over about a 3-year period to build this mine. And that's without a mill. We'll be shipping to a custom mill, whether it's Bell Creek or whether it's Redstone Mill or whether it's Newmont. We'll make that decision probably about November, December of this next of 2023. Now, sustaining capital over that 11-year period would be roughly about another 200 million here. Again, at $1,700 gold. Now, the other thing I was looking for is what are the cash costs per ounce? You want to be under $1,000. We were at 814, and then say if you put in all the capital with it, you're just under $1,000 an ounce. We hit the hurdle that I was looking for. Production per year will be almost similar to what we developed called Black Fox, on the east end of the camp near Matheson. It'll be 85,000 ounces. That's because we feel very comfortable of running a 85,000 ounce producer, roughly 2,400 tons a day of ore. Now we'll move on to the next portion of it. When you look at it, you say, okay, what if their gold price tanks? What if it goes down to 1,500? Well, you've got the numbers here, 224 million NPV at 5% discount with a 23% return. Well, let's jump up to where we are today, just above 1,900. You're at 530. So what it says is we got a robust project. Whether it goes down or stays up, this project will make it in the long run. Okay, this is a layout. If we're up in the airplane 3,000 meters and we're looking down, if you look into the earth, where are the ore zones that we've drilled? Okay, we've got the number 9 zone. This is one we're going to start with that we'll be referring to as the bulk sample area. And then we have what is called the access into the B zone here, and the north zone here, or the west deep zone. These zones we believe are tied at depth with the upper zone called the number 9. So they may be all, but we've got to prove that. And I'll show you on the next slide how that occurs. The yellow areas would be areas we've got to infill drill between the ore zones. Now, technically, all these ore zones will connect together through the east zone, the west zone, and the east zone extension over here. We just have to add more ounces. How many more ounces could we add? We can probably put another 500,000 to 1 million ounces within these areas here once we get back to drilling and underground development and drilling. Now with that, I'm going to take this and I'm going to flip it up to a cross-sectional view. And this is the cross-sectional view here. And you see the same ore zones here, the east zone extension, the east zone, the west zone. These are actually, we're looking east now, and these are 8 different structural features within the shear structures. The red and the purple would be higher grade zones. The yellow will be a little bit lower grade, but we really need more drilling to bring them up into the upper categories. And then we move over here to the number 9 structure. There's a gap in between the number 1 through 8 and the number 9. And then we'll talk about at the end of this slideshow, the south zone. This is the new discovery that looks like a parallel to number 9. So we're not to the Destor Porcupine yet. It's sitting way out in the wall here. We usually don't mine right in that fault. You mine within these areas here. So our first bulk sample will be taking a ramp system down here, get alongside this ore zone, re-drill it on close base centers, mine it, ship it to a mill. So we'll have 3 data sets. We'll have the drilling from the surface, we'll have the drilling from underground, and then we'll have the actual true mining of that ore body. Roughly about 86,000 tons will be mined and shipped out for about 22,000 ounces of gold. With those 3 comparisons, that will give us the database to say, can we superimpose that on the next zones next to it and build the pre-feasibility study? Well, obviously, we're going to probably go over here and do the same thing we did here. We're probably going to go over to this zone over in this area here, the west zone, and do some more bulk sampling there after we finish this if we have success. And I mentioned the West Deep area here. This area here was drilled early on. This is between 750 and 1,000 meters in depth. And it's got great grades, good ore zone, but I think it's tied to the number 9. So we've got to get underground to prove that this 500-meter area connects up with that lower zone. So it's pretty exciting to say, can we add ounces of gold? We can add ounces of gold everywhere you can look here on this property. So this is what it looks like when you drill it. You bring the cores up here. The cores say down here, these were drilled early on. The 10-30 would mean 2010. And they were hit, the structure was hit at 727 meters to 738 meters. That's pretty darn deep for 9.21 grams. And then you look at, say, other hits down here. You got the 9.2 at 11 meters. You got 5.4 at 11 meters, 8.13 at 15 meters, 5 grams at 5.7 meters. Voila, you got a great system down here. The smart geologist, and I'm not claiming I'm a mining engineer, but they asked me if they could continue a hole in the west zone because they were certain that they could hit this structure up dip up here. The very first hole 2 years ago hit it. And this would be 21, would be 2021, 20-82 would be 2020. Okay, they hit, say, from here, 310 meters to 320, 9.4 grams, and then likewise up here about 9.37. But if you go through the list of hits, 7.16 grams at 9.7 meters, 7.4 at 10 meters, almost 9 meters here, 9 grams at 10 meters, 9.4 at 10 meters. We've got a very consistent ore shoot sitting in here, and that's what makes mines. So that's what we'll be taking on first, right in this area that's marked in purple as the bulk sample area. So it's pretty exciting to have this type of gold in near term that you can produce it. When they developed the model, how they looked at it, they said, well, let's look at our next door neighbors. P&E consultants out of Toronto did the work. And what they did is they looked at a lot of data that they were able to actually extrapolate from work they'd done in past history. There was 3 ore zones here, and you can see those ore zones here. This is basically the West Timmins area here on that ore body. Then you got Thunder Creek, 144 Gap. They mine about 2,000 tons a day out of this area. But if you look, we've got 8 structures, not 3 there. One here called 9. In the south zone, we haven't named it number 10 or 11. We've got a lot of different ore zones here to work with. And you can see the template here and all the little marker pieces here, all the different mines right up the trend where the gold is, and we're right in line with that trend. So you might ask, why didn't they mine this before? Well, we're covered with about 10 to 15, maybe up to 20 meters of glacial fill. There's no outcrops. There was nothing for easy geology for the old timers. And that was just left behind for us to say, okay, let's use geophysics, let's use wildcat drilling, and let's start projecting where these zones should be. And we found it on the east side of the Matagami River. Now, what we're working on with the Nordman, Knight and Peace Hole, Blue Heron engineering groups is really your closure plan. Okay, what is your permit? Okay, the application really is the permit for the waste and the surface disturbance, say from the waste that comes from the underground that's deposited. How do you reclaim that? That's really what your permit is. It's not really to mine gold. It's saying, yes, we're going to mine gold, but it's all the waste impacts, the roads, the water ponds, different things that have to go into this. But what goes into that document is really a lot of work on the hydro grid, which is underway right now with Hydro One, permits to take water, there's air and noise, there's a lot of different studies that had to go into this document. They're all done and being put together. I did see a draft about 3 days ago that we're working on edits and that sort of thing. So I think we're going to be a little ahead of schedule. They're saying by the end of August, early September, they'll be ready to deliver it to the ministry. They may beat that target, which is good. Baseline studies, terrestrial baseline studies, assessment, aquatic baselines, hydrology, flora and fauna, everything will go into this document. But anyway, we had to do a lot of geotechnical drilling. That's where Knight and Peaceholt's group came in. The geotechnical told us, can we hold the ground open, a 4 meter by 4 meter tunnel going down? And the answer was yes. The other one they look for is, do you have arsenics? Do you have bad actors in the waste rock that you have to account for and deal with? And the answer was no, we don't. So anyway, we've got a not a pristine property, but one that's never been mined. So there's no brownfields or no thing to correct from past history on mines. Now, this would be the actual blueprint or the footprint of the property. The arrow here points 13 kilometers. You can be at Horton's grabbing a coffee and a donut or a sandwich from here. So, I've never had a mine in my portfolio over time that's that close to town. But that's where the mines are. They're close to the cities of Timmins, Ontario. Here's the turnoff. And here we'll have the core shack, the assay lab, the dry facility, mine rescue, and then on the road over to the portal. And this will be what's called the box cut to the portal. It'll drive it down, then the ramp will come in this area here, and then there'll be water ponds and other things for polishing ponds for the water that's pumped out of the mine. There's not a lot of water down. There's a lot of surface water, but not a lot of underground water to deal with. Okay, when you're driving the ramp, you start with what's called a box cut. You move the glacial fill off, and then you start your ramp down gradient, roughly about 10-12% maximum incline, roughly 4 meters by 4 meters high. We'll be doing about 1,200 meters here to get to the top of where we'll start the raised bore area for ventilation. And then as you circle on down alongside the ore body, the red would indicate the ore body here. This will be another 1,200 meters. So they're just a little over 2,400 meters that we'll have to put down. And then you see the green areas. Those would be the big stope areas. And you see the light blue. Those are the accesses that come across the top, the middle cut, and then the bottom cuts of your blast hole open stopes. There'll be 4 of these stopes, one each individually completed. They'll be backfilled with waste rock, some backfill from sand from other operations will mix, and we'll put cement with it. So it'll be a cemented fill. We will not inundate any ore around the actual stoping areas. The orange is the ventilation connection raises that go all the way to the surface here. And from there, that'll tell us, again, the third leg of the puzzle is what's the mine grade? What's the recover grade? How does that compare with what you drilled from the surface? How's that compare with what you drilled underground? So we'll have a lot of answers, say 12 to 18 months from now. So from that, what are you going to make? Well, hopefully money. Usually test projects don't make a lot of money, but this is a high enough grade and it's bulk mining, so the cost will be a little bit lower. What we're targeting 100,000 tons in the permit will actually indicate it here, 86.5 thousand tons. There'll be a gross gold 22.6. What will you recover? Roughly just under 20,000 ounces with the losses and the mill recoveries. The gold grade will be 8.13. The recovered grade should be about 7.2 grams when you're completed on this. So at $1,900 gold, NPV at zero discount, after you pay back the 25 million or say 27 million, I guess it is, for doing the project, processing the gold ore, what should you have left in the bank? You should have about 18 million left in the bank. If you want to start discounting it down, you can discount it down to 8% if you want. You're still going to have about 13.5 million left in the bank. Internal rate of return just on this piece of the project is 91%. This will be the template for us redesigning the rest of the mine, moving on to the next bulk samples. And the main goal here is to know all the criteria from the drilling, the gold production, and how to extrapolate it through the ore body and get an underground gold grade up from where you originally drilled it. Now, with that, here's the permitting schedule. We're in 2023 here. We should have the permits issued right about where my cursor is here below 2024. but really everything will really get underway in the last quarter of 2023 and the first quarter of 2024. We should be shipping ore by the fourth quarter of 2024 through early 2025 to a custom mill. With that, that ends the bulk sample part, which is the number 9, which you see in this structure here. But you move over and you say, well, what have we got for the investor after this? Well, obviously, we've got the big shear zones on the north side of this structure here. They're hosting, almost, we'll call it 1 million ounces of gold there. We've got brand new hits over here saying there's a parallel system to this, and they're big, wide zones. And we'll be drilling those probably in about 6-8 months. We'll go back to drilling this. And this is, again, the Destor-Porcupine South contact structural area. We'll go to the north and start developing that. So we'll probably have a whole different mining setup on the north structure of the Destor-Porcupine. But I can't do this myself. I've got a team, and they're a really good team. Tim Smith, he and I have worked together for many, many years on mines like Montana Tunnels, Florida Canyon, and he came on early on when I bought the Black Fox project, what was originally called Glimmer, and then we renamed it Black Fox. He went all the way through the mining, the metallurgy, rebuilt the stock mill for me, did everything with his general manager, Ryan Lougheed. Now, it's interesting, Ryan Lougheed is an environmental manager originally. We converted him to a mining geology. He's a jack of all trades now. I can't say enough about this fella here. Nate Tewald and Leah Page, they're my top-notch geologists. I give them credit. They find the gold. I don't tell everybody I find the gold. I just coordinate and give them the tools to these people, try to find the money to put these projects into production. Even though I'm a mining engineer, I love to run and operate mines. And then we've got Sonia Agostina. She's a great CFO, been with us for quite a few years now, about 18 years of experience. Lisa Buchan, she's a vice president of corporate development, but she's a vice president of everything. If I get hit by the bus, she can take over. She knows everything about what we're doing, and she's a quick learner. The board of directors, Mario Calantoni, he's an engineering operator type that is just trying to retire a little bit, but he's out of Timmins, Ontario. Michael Hobart, he's Fogel Rubinoff, both a mining and a securities lawyer out of Toronto. Thomas Kaufman, a founder and former chairman of M Partners, the big banking group. He's on our board, audit committee chair, great person. Gerhard Merkel, he's the appointee of CCM Capital, and great all-around business trading type of company person, brings a lot to the table on finance. Dick Nana, he worked with me on Black Fox. He worked with me in Nevada on Getchell on different projects. Great experience in geology, and he loves Timmins. JT O'Neill, he and I have worked in Sarco. We've worked at Getchell. We've worked at Apollo altogether. He's a finance guy, but he's been a CEO of companies, one which was Jarrett Canyon for Eric Sprott. No, so he's not a Eric Sprott's appointee, but he's worked with Eric, and Eric's comfortable with JT O'Neill. And he's a good finance person. He's also on our audit committee and compensation committees and things like that. So we've got a well-rounded board to take our projects forward and the company forward. So I guess what I can wrap it up with here is that we're in a premier mining jurisdiction. We've got a PEA to support this, and soon we'll have a bulk sample to support the PEA and advancing it into pre-feasibility study. We've got unlimited immense blue sky exploration potential. And with this bulk sample underway, this will really define our company, and it should interest the shareholders. And we've got a proven management experienced team to develop this. They're from different facets of the U.S. and Canada, and got a lot of experience to bring this off. Now, one thing I will say again, okay, when you're drilling and you're showing great core, you're hitting gold, that's really lighting the market up. That's great. What doesn't light the market up is permitting. Well, geez, where's your gold today? Well, just wait. Give us 6 months and we'll show you the gold for sure. But anyway, we, for 2.5 years, developed the gold, 1.56 million ounces, did the PEA study, told everybody we get it to a point where we could permit it. We're there, we're permitting. And so by August to September, we'll actually be applying with the ministry. And again, George Pure, the Minister of Mines, will help us push this through for permitting. And we'll show the market the next mine that's going to come online in Timmins, Ontario, Canada. So with that, Tim, I think we're probably just about out of time. I'll turn it over to you and open it up for questions. I'm not hearing you, Tim. While he's doing that, I had one comment I can read with you. With this gold reporter over 1 billion, why is the share price so low? Well, there's many reasons. Obviously, you go into doldrums just before the summer, and from there, you wait for September, I guess, to come around. But there's one key issue, and I'm not downgrading flow-through financing. Flow-through finance groups are great for exploration dollars, and we've used a lot of them. And what happens after 120 days is those shares come back at you. And if you're not ready for them in the market, which recently we were not ready for them, we didn't have buyers, that's what happens. It hits you on the backside, so to speak, and it will lower your share price till those shares are gone from the flow-through people. So again, I like flow-through groups. I know the shares are going to come back, and that's why the price goes down a bit. So with that, Eric Sprott is a supporter of ours. But what you can look at is once we get underground and we're starting to produce gold, then that puts us into a mid-tier base. Instead of being the junior explorationist, we will be the group that's moving the next mine into production. That will light the market on fire. So what I can say, it's a good buying opportunity for anyone that would like to get in right now. So with that, Tim, I don't know if you've got your mic fixed yet. Okay, I've got one. I'll just read it off here if Tim's mic doesn't work. Anyway, it's from, I won't say the name. Do you think only one air vent would be dangerous? No, not in this case. We've only got 4 stopes. In that will be a secondary escapeway and a vent hole just for those 4 stopes. Now, if I was having just one vent raise for a whole mine, that's totally dangerous. So I like your comment there. How many vent raises would I need? And how many other shafts would I need? I'd probably need about 10 more to operate a mine at 2,500 tons a day. So that was a great comment, that it will be fine for this project only because it's a one ramp, one stope area, and then everything's ventilated out, one hole, and it'll be a secondary escapeway. So I think it's very safe to do that. But if I move on to a second stope area, I will need another vent raise, and followed by a third stope, I'll need another one. So each one you'll have secondary egress going in and out of the mine, as well as ventilation flowing through the mine. So I like some of the comments here. So anyway, I'm not sure Tim's going to get his mic fixed here. Maybe I'll get another comment here on the side that I'm reading here on a chat here shortly. Okay, I don't see any more comments with that. So since Tim's not here to wrap it up, what I'll do is I'll thank everyone from the Pacific Coast and California area that's listening in today, to the U.S. up to Canada. And I'd like to thank Timothy Lee here for the introductions, as well as Mark Stiles and everybody in the Red Cloud group for sponsoring Galleon Gold today and for publishing on us. So thank you, Tim, very much. Okay. All right. Thank you. Okay. Bye.